Hey, friends, let's find out, has really Bitcoin become the gold or vice versa? Hey Ginny, start your analysis.
You know, for over a decade now, one question has really been shaking up the world of finance. Has a new digital upstart finally arrived to take on a 5,000-year-old pillar of wealth? Let's dive in and see what the hard data actually says. So is it? Is Bitcoin really the new digital gold? Well, if you're looking for a simple yes or no, you're not going to find it here, because the data reveals a relationship between the two that's way more interesting and, honestly, way more profitable. On one hand, you've got gold. It's ancient, you can literally hold it in your hand, and it's been trusted for millennia. Then, on the other hand, there's Bitcoin, brand new, completely digital, and, well, we all know it's volatile. It's that classic story, right? The old guard versus the new challenger. But to really get their roles, we first have to talk about a huge problem that every single investor has to deal with. It's called the investor's dilemma, and it points to a hidden, and frankly, a kind of terrifying flaw in that old advice we always hear about diversification. Think of it like this. When the market is calm, sunny skies, all your different investments, your stocks, bonds, your international funds, they're like separate little boats just bobbing around in a harbor. Each one is doing its own thing, and that is diversification working just like it's supposed to. But then a financial hurricane hits, a massive market crash, and all of a sudden, it doesn't matter how different those boats were. That huge storm surge of panic, it slams every single one of them against the exact same seawall at the exact same time. The very diversification you were counting on just disappears right when you need it the most. And that is where this whole idea of a safe haven becomes so critical. A safe haven is basically the financial version of a dry dock. It's an asset that's supposed to hold its value or maybe even go up when that hurricane is raging. And for 5,000 years, gold has been the ultimate dry dock. So here's how that diversification trap actually plays out in the real world. You do everything right. You buy a mix of international stocks to spread out your risk. Then some major crisis hits somewhere in the world. And what happens? They all tank together. And look, this isn't just a theory. We've got the hard numbers to prove it. In finance, we use a metric called correlation to see how two things move together. A score of 1 means they're in perfect lockstep, like they're glued together. Well, during a big crash, the correlation between US and European stocks skyrockets to 0.878. That is insanely high. Your supposedly separate boats, they're not just hitting the same wall, they're hitting it as one giant tangled up mess. Okay, so this brings us right back to our big question. To figure out if Bitcoin could be a new kind of safe haven, a new dry dock, researchers decided to put it through the ultimate stress test to see how it really behaves when the pressure is on. Now, the academics use this super sophisticated method. The fancy name is multivariate extreme value theory, but don't worry about that. You can just think of it as a financial stress test on steroids. What it does is it ignores all the calm, sunny days, and it focuses only on the absolute worst days in the market, the very heart of the hurricane, to see how different assets really react under fire. So the first stress test pitted the stock market against Bitcoin, and the result was, honestly, it was stunning. When that financial hurricane hits, Bitcoin doesn't get dragged down with all the stocks. Its correlation to the market drops off a cliff. It starts to float on its own, which is exactly what you need a safe haven to do. All right, so next up, they ran the exact same test on gold, the OG safe haven. And the result? Gold did the exact same thing as Bitcoin. Its correlation to the stock market also plummeted during a crash. And this right here is the crucial piece of evidence. Under extreme pressure, Bitcoin behaves just like gold. So if they both act like safe havens, the choice seems pretty simple, right? New school versus old school. But not so fast. The research actually uncovered a pretty surprising alliance, showing that the real answer isn't a simple either or. This leads to the logical question for any investor who's looking for some protection. Which one do you pick? Do you go with the new digital challenger or the ancient metal that's been trusted for centuries? Bitcoin or gold? The study's answer couldn't have been more clear. It wasn't or. The answer is both. And this led the researchers to a really powerful new concept they call diversification in diversifiers, or D&D for short. It sounds a little complex, but the idea is actually super simple. The ultimate protection doesn't come from just having one safe haven. It comes from having multiple safe havens that don't move together. And this is the magic number that makes the whole thing work. The crash correlation between Bitcoin and gold themselves is a tiny 0.054. I mean, that is practically zero. It means that when that financial hurricane hits, Bitcoin and gold are essentially in two totally different harbors. They're almost completely independent, not just from the storm, but from each other. It's incredible. All right, so diversifying your diversifiers. It's a great concept, but what does it actually mean for a real-world portfolio? How would you actually use this idea? Well, let's take a look at a traditional, safe portfolio. You know the drill. A big chunk of stocks, maybe 80%, with a solid 20% slice of gold to act as that one single safe haven. This has been the standard playbook for decades. But now, check out the D&D portfolio, built using the optimal mix that the research uncovered. You've still got a core of stocks, of course, but now that safe haven part of the portfolio is split between both Bitcoin and gold. This is what it means to diversify your diversifiers. Okay, let's bring it all home. What's the big takeaway here? First, when markets go crazy, Bitcoin really does act like digital gold. Second, gold is still gold. Its status as a safe haven is rock solid. But here's the most important part. They're not substitutes for each other, they're complementary. They're partners. And the ultimate strategy, according to this data, might just be to hold both. And that leaves us with one last, pretty fascinating question to think about. This study showed that a digital asset can work hand in hand with an ancient physical one. So, as our entire world becomes more and more digital, you've got to wonder, what will the next generation of safe havens be?